Good evening, sir. So my topic is about high interest rate perception in MFI loan products. So before heading towards the main topic, like high interest rate perception in MFI loan products, I want to say something about what is MFI loan. So it is basically a loan that is given in a small amount, approximately from ranging from 10,000 to 1 lakh, to small individual who want to start anything, any business, or for agriculture, or for any emergency purpose. So the client perceive that the rate is high here in these MFI loans instead of and as they when they compare, they find that the traditional interest rate is cheap as compared to MFI loans. So what is the reason behind that? So I want to discuss these things in the upcoming slides. So now the reason why borrowers perceive MFI rates are high. So if we compare the traditional banking rates and MFI rates, so the traditional banking rates are like from 10% to 15%, but in MFI the rates are approximately 18 to or even it can start from 18%, or sometimes it can even more even more to 26 percent. Now the reason why, what is the reason why the interest rates are so high? The first of all, here the MFI rates are high because they takes risk, because when they lend the loan, they did not ask any credit history, or they did not find any history. Then also they provide loans, so they are taking risks. That's why the rate is also high. And in this MFI rate loans, there is a small frequent repayments, like there is a repayment of every week also. So here the client feel a financial burden, a psychological burden, that they have to repay their loan, that they have to repay their loan by frequent repayments, like every week. So they also feel that the traditional banking are much better as compared to MFI rates loans, because here the rate is also high, and there is a psychological and financial burden is also there, that we have to repay the loan frequently every week. And there are also a lot of other charges also in this, like processing charges, insurance premium, GST, and documentation charges, that also leads to high interest rates here. One of the major important reason why the client feel a little bit unsecure or difficult having, like they face difficult in MFI interest loans, because here is a lack of transparency is also there. Actually the clients, they are like, you can say, lower middle class people, or or like poor people. They don't have that much of literacy about financial things. So first of all, they feel that financial burden, that they have to pay continuously in every week. Then also the transparency, like here in MFI, the interest rate calculated in the interest rate is calculated based on two methods. So they did not understand in which method their interest rate is getting calculated, and how they should pay, and the interest rate is high, and the transparency is not there. They did not understand what is this method, what is that method. Like basically there are two methods. So this is also one of the lack of transparency, and financial literacy is also there. As I was discussing, there is two method of interest calculation. One is flat rate, and second is reducing balance method. So here the clients, they as I mentioned, they are not that literate in finance things. So they face difficulty in what method their interest is getting calculated. So in flat rate, the method is, the interest is getting calculated in overall the whole amount, whole principal amount. Suppose the, even if you have repaid like half of the principal amount, then also the interest is going to get calculated on the whole principal amount. For example, the loan was 50,000, and the interest is 20%. So it 20%, like 1 year. So the interest rate is 20,000, sorry, 10,000. Now if the person has paid 40,000, suppose, then also the interest is getting calculated in 50,000, that is 10,000. So the total repayment would be 60,000. Okay, but in reducing balance method, so here the interest is getting calculated on only on the left amount, that the client needs to pay. Like suppose the interest is getting calculated on the left amount that the client is supposed to pay. There is in this case the client does not have the clients do not have to pay on overall principal amount. So here is also confusion like for the client, and they face difficulty. Even a flat 20% flat rate can also translate to a 35 to 40% effective reducing rate equivalent. So in overall conclusion, like why like MFI charge higher rates? So as I have mentioned, because of the they are taking high risks first of all, and they have their operational intensity like doorstep services also, because that is for the rural places. So they have to visit every house in rural places. That is also a cost itself. Then field staff cost, then small ticket efficiency like like as I said, they have to pay frequently. So that is also a operational cost is also engaged with that, and obviously it's an loan, so they have to maintain proper compliance with the banks, like with the central bank like RBI, the Reserve Bank of India, like regulatory compliance, overheads, reporting, and capital reserve ratios, capital adequacy, all the audit matters they have to maintain. For these all of these reasons, the MFI charge are higher as compared to traditional banks. Thank you.